Hi, good morning, everybody. We have a short week. Hong Kong's got an even shorter week. They were open today, and then they're going to be closed Tuesday, Wednesday, and Thursday. They'll open back up Friday, and then they're, of course, closed on the weekends. So this was a short day for them. They weren't even open a full day, and then 3 days closed. What we're looking at is a website called tradinghours.com. It's one of the best places you can go to try to figure out what markets are open, who's closed, who has holidays. It's a free site. You don't need an account. And so we're going to be a little light in the volume with the Hong Kong exchange closed over the next 3 days. NASDAQ down more than 0.75%. Then the S&P at around a half, small caps at a quarter. Japan up a quarter, a little bit of divergence there. Now, I'm not really big on survey data. You know, it's more often than not, it's not impactful, but you don't want to ignore data as it's coming out either. And then we have some auctions today, 11:30, 1 o'clock, couple of Fed speakers in the afternoon. So that's going to offer up some additional risk. Kind of puts a little bit of a crimp in the afternoon 0-day play. We're still looking at a potential rate cut by July. That's what the market is pricing in, but it doesn't have a high conviction of that yet. Same thing with June. It's pricing in a possibility of a cut, not high conviction yet. Nothing before June. In fact, they're kind of unwinding the possibility of a cut before June. So we want to keep our eye on that, see if it starts to trend the other way. VC funds and CTA positioning are still getting reduced. You can see we're down below the zero line at this point. But they're not just dumping everything, right? It's very systematic and orderly. They're just taking their time, reducing exposure. So we'll keep our eye on it. See if it really starts to turn around. This low is from the 2025 April low when the president was really hammering out on tariffs, right? Right before the bond vigilantes got him to capitulate. So that's how it could really look if we were getting negative. And of course, we're all the way up here, so we're not even close to that. We have low risk for today looking at the president's schedule. So other than those Fed speakers, the afternoon is looking relatively well, all things considered. with those Fed speakers, you can dig deeper into it and see if it's even going to be a live event. They may be pre-recorded, or it may be a closed door event with no press. Uh, if there's no press, or if it's pre-recorded, it's likely that there won't be high impact, right? Especially if it's like just some Girl Scout luncheon or something like that, right? They're just chipping their teeth, and no threat of a gotcha question or anything that can spark and move markets. All right, we checked that put wall. Still holding it as structure 6811 cog line, kind of lower end. We're not as low as last week, so we're still inside week at the moment, inside day as well. I take that back. We gave up the inside day. Want to, yeah, we're back inside. You want to take everything from the short day and wrap it up into today, right? So consider everything from Friday's close until now as one day, one event. It's the best way to handle short days. So this box that I just drew goes back to Friday's low, Friday's high, and you can see we're still sitting inside of Friday's range. Take everything from Monday and just apply it to today. So we're under the 10 week, and of course we're under all the daily moving averages, 3, 10, 20, 50. The only thing we have left below us is the 200, and it's a long ways off. We did get the lower high presented. I think we did a really good job with that presentation. Lots of wick structure up there when we do manage to work our way back up. But right now we got to continue to look to the downside and prepare for this 6750 area. Now, if you look at the reversal bar, the last two times we had that big drop, reversal bar, big drop, reversal bar. One of the reasons the reversal was so strong is because the drop was big enough to get us to cross through the gamma levels. We're already firmly underneath zero gamma and the volatility trigger. So we're not changing from one regime to the other. We're already in it. And that can change the way it looks when we make a drop. So far, we're not even making a drop, right? We're just sitting inside of the previous day's range. Now, out here on the daily, it's not showing Monday, right? It's kind of one of the reasons that I said take everything from Monday and put it into today, because that's what your broker's doing. This candle is from Friday, and this candle is from today. It's as if Monday didn't exist out here on this daily, right? So you want to do the same thing in the pre-market. Just take everything from Friday and apply it to today. So if we're going to get a move today, we got to get an inside day breakout. Friday's high is the top of this range that we've got measured. From this top to this bottom, it's the midpoint. So if we're going to get a move to the upside to break Friday's high, we're going to have to also break the midpoint of this measured move and fight the 20 and the 10 and the 50, because they're all up there over our head. And the 10 week it's also up there too. So I don't want to say we can't do it, but it's going to take a significant amount of headlines or some sort of macro push to get something like that across. Otherwise, we can break Friday's low, come down here and check 67.50, and if we get under 67.50, it opens 66.50 because we're running 50s. 66.50 isn't on the table because we haven't crossed below 67.50 yet. Right now we have to get there, get below it, then it opens us up to the next level. Now 66.50 gets us really close to the 200 period daily moving average, and really if we get that close, we're very likely going to go ahead and tag it. And that would line us up with this double bottom that we've already got resting down here. We got pretty close to the ADR, but in this case, I don't think close is close enough. So we want to go ahead and get on down there and tag that ADR. If we can get that done early enough, we can go to the other side by the end of the day. Technically, we could still go to the other side by the end of the day anyways. It would just be more of a trigger for the long back to the other side if we could actually hit this lower edge first. Our 21-day average daily range is now 100 points. I think it was less than 6 weeks ago, this was at 60. So how far we move on a day-to-day basis, can call that the rate of change or the average daily range. It's increasing, and it is a measure of volatility, right? Volatility is just a real fancy, smart word for movement. So, nerd word, volatility is movement. Our day-to-day movement is greater. Our day-to-day volatility is increasing. So these big daily violent swings are increasing, not decreasing. All right, we're completely under the weekly pivot. We haven't hit it yet. That's bearish to be underneath the weekly pivot. We're also under the daily pivot, and that's what we want to focus on. If we're going to try for an upside move today, we've got to get back through our daily pivot. The S1 lines up really close to the ADR half. So if we break our Globex low, get below 69.11 cog line, then 6,800, which is an options level, it's a big round number. It's got a lot of structure already. It also has the S1 and the ADR half. So there's a lot of support, a lot of structure around that level. It's not to say that we can't break it, because price can do whatever the hell it wants. But it's going to take some effort, either some headlines or some other fuel that would drive us to break those levels and work our way down. we're still sitting in the zone from last week's second distribution. Well, I guess we fell back out of it. If we rise back up through the 32 cog line, then we would be back in this zone. So for that move to the upside that we were looking at, it's going to be a fight working all the way back through to 6,900, which is the ADR half on the upside. It's doable. It's just going to be, it's going to require a lot of effort. So we should be able to see that effort in the pace of the tape, headlines, something that's fueling the push. That's a little too far down. We're not going to need this one. I think that one probably has more value to it. 6,600, we've got these four levels, one here and here. They're almost perfect. And then two down here creates a little bit of a channel. That's too far. So like we were talking about a little bit ago, underneath 6750, 6650 is on the table with an overshoot into a previous point of control around 6600. The trend from net buying to net selling has started to roll over. We're underneath the 50, pressing on the lower edge of this Bollinger Band, which is likely to cause it to start to stretch. We're certainly not in any sort of squeeze here like we was back here in November. So kind of just need to see how it plays out. But looking at this, we've lost those net buyers. And either we're looking at more of a two-way market or just heavier on the sell side. We'll have to see it play out. But we're still crossing back and forth through that 50. And as long as we're hanging around that 50, then this pretty much has defined our zone. It's very likely we need to get out of this to signal the bias. So break below 38, we can push that Bollinger and really expand. And a break back above 40 gives us a shot to head back up to the top of the, see that net buying come back in again. We haven't had a crossover in the moving averages in this thing for quite a while, right? We come all the way back to that April area with the tariffs and the bond vigilantes and all of that drama from last year. That's the last time the 10 and the 20 was able to get underneath that 50 period. Now we came close back here, but you know, close only counts in hand grenades and horseshoes. Ten-day, 30-minute volume profile in TPO. It's a solid brick over our head. There's really not a lot of insight here. The point of control, it's a long ways off. and to even get there, it's just this massive wall of trash, right? So there's really nothing of value here. This highlights what we're facing, really. It's just nothing but drama to the upside. There's no clear path forward for a move up. Right now, the clearest path, or the path of least resistance, is down. That I'm not saying we're going to go down or that we have to go down, because we don't. But something has to change if we're going to go up. $68.60 is a speed bump. It's the closest one. So we got to get through that for a move to the upside. If we do, then we got 6,900 and then 6,940, then the point of control, right? So it's level by level like it always is. Just drama. Hope you guys had a good 3-day weekend. Maybe got something accomplished. I didn't do anything except go see the new baby. The VPOC that we built from Thursday's point of control was taken out on Friday, but of course we don't remove it until the next day, and we hit it Monday night, or Monday morning, I guess. Remember, we're taking everything from Monday and applying it to today's trading, so technically we hit this today if we want to focus on it from that sort of perspective, right? It's my world, squirrel. So I'm not going to take it off. I'm going to leave it on. It's shown that we're not done with it. It's not a VPOC anymore. So at this point, it's just a level of interest. $68.86. Now it's our Globex high, so technically you really don't need to mark it out anyways, right? You would already be focused on that level because it's the Globex high. This will just add a little bit of weight to it, right? All right, so last Friday we examined the new week's range, but the range wasn't set in stone yet. It was still alive, it was still moving. And on Friday, when we do that, it's just a preview of what we have to anticipate for next week. Now, you can do that in the afternoon on Friday, and it's way more accurate, right? Because you're closer to the end of the day at that point. And that helps you anticipate what trades you want to put on before the market closes on Friday for the next week's trading, right? Whether it's a crazy narrow range or a really big wide range. Of course, we don't always get such a clean answer. Sometimes we just get the same old wishy-washy range that we've been dealing with, and then there's no great insight, and so what, right? Like, can't get something out of nothing, and you're not always going to get great answers. But if it was a really big, massive range, it would stand out. And if it was a really, really tight, screwed up range, that would stand out. What we can see so far, looking at what we did get, is that this 4-day week has a greater expected move range than the 5-day week that we had last week. These ranges are built on time and volatility. That's the two ingredients. So typically, we compare a 5-day week to another 5-day week, and we say, well, how big is the range? And if the range is bigger and smaller, then we say, oh, volatility must have increased or decreased because that's what would have made the range bigger or smaller. This week's range is bigger than last week's range, so we have more volatility being priced into it. And it doesn't look like it's very much, right? You can see the box is just a little bit bigger than the previous range. But that's misleading because last week was a 5-day week with 5 days of volatility. This is a 4-day week with 4 days of volatility. These 4 days have significantly more volatility than the 5 that we had last week. The market is pricing in big moves. Now, we know for a fact over the years we've learned this. If it was because of an economic event, it wouldn't actually be big at all. If the market had priced in this big move because of the calendar, CPI, PPI, non-farm payrolls, something like that, FOMC, it would actually price in a lack of movement. So the range wouldn't be bigger, it would be smaller. This projection of volatility for this week that the market is pricing in is not because of a calendar event. It's because of something else. So that's one of the things you really want to try to answer this week is what the heck are they scared of? Or why are they pricing in such a violent, volatile move for the week? Sometimes it's a binary event, say threats of war or elections have been known to cause that sort of thing. State dinners, state events, big government events like White House sort of envoys and meetings, something other than the economic calendar. And it could just be plain old volatility. So, want to be careful with this week. When we get to the edge, say yesterday's high or yesterday's low, the general trade that we take is a reversal trade. It's my 111, yesterday's 111. I love that trade. Be cautious of that trade in this environment. These wide range projections are suggesting that we don't hold the line and stay inside of yesterday's range. Instead, it's suggesting that if we break out of yesterday's range, we keep it and we keep on running. That we get really big, expansive bars like we've been seeing a lot more lately, right? Because we're in that negative gamma environment. And that will exacerbate moves, right? It will push them farther. So if we are negative, it'll help us fall farther faster. And if we're positive, it'll help us climb farther faster. We are more than 1% below the 10-day, and we've been down here for multiple days. At some point, we will come out of this. The question is, are we going to expand deeper first before we flip? There's a lot of examples where we were negative and kind of holding the line, and then we got more negative before we turned positive. Then there's just other examples where we had a few days of negative and we turned it around and we went right back to positive. The transition can be extreme. So here we were around 1% to the downside, and by the end of the day, we were 0.5% to the upside. I know it might not seem like much, but that's a significant play. Same thing here to here. We were deep negative when we closed the day positive, right? By 0.5% at least. So those transitions back above the 10-day can be violent. We're not deep enough to expect some sort of mean reversion bungee cord style whiplash back the other direction. We're not that deep yet. 1% isn't enough. So if we are looking for that sort of flip, I'd want to get a little deeper first. It's kind of a good thing to go down on a Monday. Just consider this our Monday, right? But we haven't got the inside day breakout yet. We haven't gone down enough yet to make that statement a good statement, right? Because we're down 0.5%. That's not enough. Some of the best reversals come after we get a really nice deep drop below the previous day's lows, right? Like that one and this one. These are two really good examples. Inside day breakout and an extreme, well, I guess those aren't extreme, but a good drop to the downside before we flip it around and run back the other direction. We're still inside day, so it doesn't matter that we're down 0.5%. We haven't gone anywhere yet. So GTFO, we got to get out of the box, get out of yesterday's range, expand to the downside enough that we can flip it and then run it back the other direction. Otherwise, what do we got? We got nothing. So we're not oversold. We haven't moved too far too fast, and it doesn't owe us any sort of mean reversion. Looking at the 10-week, we're 1% below the 10-week. That's nothing. That's just a speed bump, a pebble in the road. So we don't have anything yet to be concerned of here either. At some point, we'll be looking for that cross back above the 10-week. But 1%, that is not enough. So when we look at all this and we try to answer that question, have we moved too far, too fast? Did we drop down here too quick? Does it owe us some sort of mean reversion or a move back up simply because of how far and how fast we fell? Nope, it does not. So looking at what's down this morning, the Mag 7 down volume is down. Gold miners, junior gold miners, chips, Bitcoin, UFO, which is a really good signal for risk. That's down. Quantum, generic tech, expanded tech, uranium, the Mag 7 again, uranium again, China. At least it's emerging market, but we always just lump that into China. It's down this morning. So we've got a really good broad spectrum of just weakness and negative market. But a lot of them are on support. Looking at what's up this morning, what's up? The Mag 7 down volume is up. Generic energy exploration, refiners, that's all up. But really, that's all we've got. Little bit of finance. It's not really what we'd want to see. This is so generic, just XLF. You want to really hone that into some specific kind of finance. Otherwise, XLF, I mean, that's trading desks and insurance companies and just all kinds of stuff, right? I like to use banks, so KRE is a good one. But generically speaking, we've got a little wink of positive in the banks, in the finance. Same thing with solar, just a tiny bit. It's not enough, right? We need 0.5%. We're not even close to that. So when we think about how bearish things are out there, we can use that same alpha protocol approach. Look at market breadth. How much of the market, say in the S&P 100, is down at least 0.5%? 27 names. Well, that's not very bearish at all. If this was 77 names or 87 out of 100, that would be a lot more bearish. So yeah, it's red, but it's not heavily negative red, right? It's kind of, it's a little bit, it's a, it's a poquito. For the NASDAQ, 44 out of 100 names. I like using 100 names because anything that your answer is can be converted to percentages. So instead of saying 44 names, we can say 44% of the NASDAQ 100 is down at least a half of a percent. Now it's better. It's not quite half, but I mean, it's certainly better. If we're looking for a roadmap and direction, we've got a good signal started here. The best part is if we do turn bullish, well, that has to change, right? So that'll be easy to spot. First, they have to stop falling. Then we need to start seeing signals of reversal and watch them begin to climb back up. So there'll be a signal on its own, but this is market breadth, and we can make a run to the upside in the S&P without breadth. We just can't fight breadth. So we would need these to stop falling. Even if they don't rise, they would have to stop falling. Then we'd have to get something else to give us that push to the upside. 0-day flows, headlines, bonds, treasuries, commodities, something other than just breadth. And at the moment, we don't have anything. So energy, crude, little bit of ag, utilities is working in the right direction, but that's it, right? We got nothing else. So it should be an easy tell if we flip it all over. All right, well, that's short and sweet. Let's get it all summed up and get this day going. You can see we're coming down into Friday's low, 68.11 cog line. If we get underneath that, I mean, yesterday's 111 and yesterday's 1236 makes the most sense, but that expanded weeks range hints that that trade very likely is going to struggle to be successful. I'll probably still run it anyways because it's the highest conviction signal that I have at the moment, but don't be surprised if that fails and then we really begin an expansion to the downside. 68.70 or 67.80, we kind of flip those numbers over, would be the overshoot of the 1236. Otherwise, if we do flip, look for the flip to get us back into Friday's range, and then we'll challenge VWAP, the half, and work our way up towards Friday's high. If you want to focus just on the Globex because there's so much of it, remember to use Sunday night and Monday's price action. So this is what you want to focus on, all of this. Don't just use this little bit of range from Tuesday. Or if you do, then keep it a really light level, right? Don't let it hold too much bias. Give me that. Low, dirty. Grr. That's the midpoint for just today's Globex. And it doesn't really hold a lot of weight for me at this point. But I guess in theory you could do that. I just think it's going to be a stronger level if you use everything that we got, just like the broker is doing. I think that's got more validity. Price seems to agree. All right, short and sweet. Everybody be careful, be safe, have a good day. I'll see y'all tomorrow.